And it looks like we are live. Welcome to the Startup Tanks, folks. If this is your first time, this is the Climate Investor Pitch Show. We bring on the world's top climate companies, the ones who are building a better future, and we get them in front of our expert panelists, our sharks, so to speak. No trademark infringements of any kind, but we want to see more money and funding come into the climate space. That's what we're focused on at Forward VC, our early stage climate syndicate, and possibly something more in the future, focused on things and companies and investing and accelerating companies that move the world forward. I'm your host, Matt Ward, founder of Forward VC and of the Startup Tank. And if you're interested in this, interested in pitching on future sessions of the Startup Tank, we do this every 2 weeks, Mondays at 5 p.m. CET. You can subscribe on all your major podcasting platforms, YouTube, LinkedIn, wherever you are, you can find us there. Be sure to hit the subscribe bell if you're on LinkedIn to make sure you never miss a thing. And if you're anywhere else, you know where to find us. Now, about the format, what the program's like. So tonight we've got 6 incredible climate companies, and I'll be joined by 3 stellar investor panelists. I'll give them a chance to introduce themselves in a sec, but first I will pull them in here so you guys can see who's on our I would say stud panel at this point, or our awesome panel. Before we give the mic over to other investors here, though, I just want to say that all of this is brought to you guys by Valbon, by Carta. So Valbon, that's the system that we use and love for setting up SPVs. It's the simplest, fastest, easiest way for us to deploy capital, for us to get our investors, our 180, maybe 200 climate investors, accredited investors as part of Forward VC Syndicate, to invest into early stage companies. If you want to set up an SPV, you want to deploy money into really promising companies, and you want to do it in the most legally compliant and safe way possible, so that when your company's a $1 billion unicorn, it doesn't all go bust because your blockchain technology dropped, then Carta and Valbon is a great place to check out. Forward, the number 4ward.vc/Carta for more details. And founders, you're not missing out. If you guys need to have something you guys need help with on the VC side of things, you need help managing your cap table, employee options, stock options, etc., Carta does it all. So check them out. Forward.vc/Carta, CARTA, and be sure to tell them that Matt or the Startup Tank sent you. And now the Startup Tank. All our companies will have 5 minutes to pitch our incredible sharks, but now let's give our sharks a little bit of a chance to pitch themselves. Today we're joined by Christian, sorry, I didn't mean to bring you in on this. Today, we're joined by Jason Krause with Prepare for VC and Matt Morris with Vectors Capital. We're waiting on Taj from Include Ventures. Not sure if he's coming or not. So we'll kick things off now because you guys are all tuned in and live. So Matt, do you want to take things away? Tell people a little bit more about Vectors Capital, what you guys do, the types of companies you're focused on.
Absolutely. First off, Matt, thank you so much for having me on. But my name is Matt Morris. I'm a Boston-based investor with Vectors Capital. We are a new first-time fund focusing on industrial scale decarbonization using the next gen frontier technologies. So we like to look at businesses that are hardware oriented, focus on building up that vertical stack supply chain, building out platforms for the bioeconomy in the near future, and also to software using AI, geospatial, machine learning, and anything that's going to lead towards a new revolution in paradigm shifting technologies. We invest pre-seed to Series A, and really like to help. And really, the core reason why we exist is to help get these technologies from the lab into scale in the market.
Which brings us maybe over to Prepare for VC, folks that are trying to get ready on the VC side of things. Jason, you want to take it away?
Sure. Yeah, great to be here. Jason Krause, founder and CEO of Prepare for VC. And we run a virtual accelerator program, really focusing on, first and foremost, on the founders themselves. So on how to become a better leader for your company, how to get ready and understand the investor's perspective and everything you're presenting. So what separates the 5 or 6 deals an investor goes in a given year from the other 1,000 of companies they might be presented to or put in front of, and how to move forward in the pile to be one of those successful ventures. So, a lot of focus around the entrepreneurial education side, pitch events and demo days, and a lot of community events with different speakers. And then personally, I'm also an investor with EQX Fund and Boston Harbor Angels Group, pretty focused on the technology and life science sectors. So excited to be here and excited to meet all the companies today.
And then on our side, I run Forward VC. We invest in pre-seed and seed climate companies in Europe, North America, and Israel. We try to be the most hands-on investor out there, the biggest hustler and helper at the table. So I've spent the last year connecting with 1,000+ funds, incubators, accelerators, CVCs. If you guys are interested in getting money from those folks, we've published our entire database. You can find it all at forward.vc, the number 4ward.vc/VC database. And we've got some other nice goodies in there as well for founders looking to raise, investors looking for co-investors, or folks looking to collaborate and network with our climate Slack communities. Again, that's at forward.vc. And if you're looking to apply for an upcoming session of the Startup Tank and pitch live, thestartuptank.com. But enough about us, enough about what we do. It's time to hand things over to our startups of the night. So for this, we have 6 awesome companies who'll be presenting. Each one will get 5 minutes to share their screen, pitch their heart out on the Startup Tank, and then have 5 minutes, 10 minutes of Q&A with investors at the end of the night. We'll choose a startup of the night. They'll be our crowned champion. And ideally, lots of you who are watching, interested, or investing will reach out. This isn't a solicitation. This is for professional investors. Our syndicate's only for accredited investors. Nothing you see here is an offer to invest. But if you are somebody who's in the space, you're a VC or an investor, this is what you do for a living, feel free to reach out to the companies and just tell them the Startup Tank sent you. Now, without further ado, I want to kick things over to our first company of the night. And how about we kick things off with Christian and Pawprint? Christian, I think you were one of the first ones here, and we might as well reward that.
Oh, goodness. Can you hear me okay?
Hear you okay, loud and clear.
Loud and clear. Okay, and let me just get this deck up. Sorry, this is exactly what you didn't want to happen.
Oh, no worries. It's okay with an Irish accent.
It's a Scottish accent, but
it's a Scottish accent. Okay, that's not okay then.
Okay, I've got a problem. I think you should maybe go to someone else. Just let me.
No worries.
Sorry.
Then we will hand things over to Ben. Ben, you wanna take it away?
Yep. Bear with me 1 second. Okay. Oh.
And we can kick things off with Mr. Ben Patton. You want to tell us a little bit more about what you're doing? Tell me when you're ready, and then I'll start your 5-minute shot clock, and you can tell us about Dizzy and revolutionizing reusable packaging.
I'm not showing the right screen. Hang on 1 second.
I like to say technology is great, except when it sucks. If you need some tech tools to help with growing your business, we've got some cool things as well at Forward VC. You can check them all out there. It's all free. And now we got Dizzy. I hope hope you guys are ready to see the future of packaging. Your 5 minutes starts now.
Great. Thanks very much. Hi, everyone. I'm Ben Patton, CEO and co-founder of Dizzy. We're here to tackle the problem of packaging waste in groceries with our reusable packaging system. So most of you on the call understand why we're doing this, the devastating impact of packaging waste, particularly plastic packaging waste, on our environment. You'll also probably understand how recycling rates are very low. We only recycle about 10% of the waste we create, and household waste management costs are skyrocketing. So we estimate it's over £1,000 a household in London at the moment and growing the whole time. So the long-term outlook for us is that there will be a transition from single-use to reusable packaging. It won't happen overnight, but it will happen. And this would mean a massive opportunity. A $12 trillion global grocery industry is being pushed and pulled to adopt reusable packaging. Lots of people want it, but we also see new and recent policy instruments and inflationary pressures. So for a lot of the brands we work with, they've seen their conventional single-use packaging go up in price by 50% in the last 12 months. So what's the solution? We've been working on a standardized reuse system. because
I couldn't share it.
that's how we make it convenient, affordable, sustainable. And one point to clarify, we are providing product in refillable pots. So you buy the product online or from a store, it's already in its packaging. It's not refill in store. We think that has a place, but we think pre-fill is going to be the dominant solution. We oversee the whole reuse cycle, providing the packaging, cleaning it, sourcing product, filling product, labeling, sending it to customers, and via our D2C business, and also via retail partners. The one difference being that with our B2B customers, retail partners, we deliver to their central distribution centers, which means we don't bear the cost of the returns. So the principles are fairly easy to grasp for reusable packaging. The challenge is on reaching cost parity and utility. To design the packaging and the system with those goals in mind, we very deliberately started with our own D2C store, which gave us the freedom to optimize for consumers and supply chain players with no interference from brands or retailers. So this has been really critical to helping us develop what we think is a very user-centric solution for the packaging and for the operations we've built. So let's look at a few examples of how the design, the packaging, ops, and digital infrastructure meets those objectives. So these pots we have, they tessellate, so they take up less room, and they're more convenient and stable to handle. And then because they nest like this, we can, they take up less space in the home and the supply chain. For example, we can fit 4,000 on a pallet, radically reducing the cost for transport and storage. This makes reuse much more sustainable, but we're also thinking about the way in which the materials we use might make it more sustainable. So our warehouse, our integrated production facility, our reuse hub, makes reuse work as efficiently as possible. And the main way we do that in the hub is custom designed integrated equipment, taking a product through from the return process, through cleaning and filling, through to dispatch seamlessly.
1 minute warning.
And then our digital platform. So this helps shoppers return packaging conveniently, radically reduces the cost of reuse. For example, with the RFID tags on each pot, reduce the cost of checking in return packaging by 80%. The platform also makes it much more scalable. So to scale, there are a few key things we're working on. Convenient doorstep returns and new packaging formats will help us grow, moving from online to offline sales, expanding the range, and growing to new regions. We've got a great team to deliver, and you can see the impact we've had from these numbers. But a really important point is on the go-to-market strategy to learn, and also how central standardization is to the transition to reuse. We're the only ones working on this strategy, and we believe it creates a critically important network effect. So basically, the more people that use our packaging, the cheaper it gets, the more convenient it gets to return.
And your time is up.
Okay.
Anything last that you needed to add while I bring the other investors in?
Well, that last point's really important. You know, developing a standardized approach to the design and the operations means that really for every new retail partner we pick up, we become kind of more entrenched as part of the retail ecosystem. It gets easier and cheaper for our next retail partner. So yeah, but I think 5 minutes isn't very long. There's a lot more to cover, but hopefully that gives you a flavor.
That definitely gave us a flavor, and hopefully we'll get some more things to cover in the questions. I'll hand things over first to Jason. Do you want to take things away and kick off questions for Ben?
Yeah, sure. Great presentation. And yeah, a couple questions on kind of, so who bears the cost of, I guess, are the products themselves slightly more expensive with the packaging included, or is that you know, the company is becoming a clean company and being able to charge more to, how do you think about
Yeah,
the
good.
cost?
Yeah, really good question. Yeah, so I guess there are different motivating factors for retail partners we're working with. So for some, it does contribute towards CSR, climate, sustainability goals. Generally speaking, the price points we're creating are around 5% higher than the equivalent they would be for the equivalent product in single-use packaging. So, but it's pretty close, and we're there on some categories. It does depend a little bit on the product and how intensively packaged it normally is. I mean, what strategically we're targeting higher end retailers, higher income consumer brackets, higher end brands, where there's just a bit more margin to play with, and the slight increase in cost is felt less keenly. So I guess the bet we're making on long term is that for single-use packaging, it's going to get more expensive because the costs are going to increase and the regulatory costs are going to increase, and that people are increasingly going to be drawn towards our reusable packaging, which we continue to make more and more competitive on price. So, we've brought the cost down by 20 percentage. Well, we've shifted the margin by 20 percentage points in the last 12 months.
Oh, great. And then you kind of touched on this at the end, but so is your differentiator as you scale, it's not going to make sense for an individual retailer to do it while you'll have the scale to kind of clean, reuse, and, bring the new packaging. Is that how you're thinking about this?
Yeah, I mean, I guess you could, it's a kind of concern that, legitimately you can level at any business at pretty much. And I guess the kind of good proof point we have already is that our first two grocer partnerships, they're retailers that have already been selling product in reusable packaging, and they've looked to us to take over parts of their range that they're selling and provide them with a more cost-effective solution. So I think, these are not the biggest retailers. I mean, they're good-sized, medium-sized retailers in the UK, and we're working our way up the food chain. But I think for those larger retailers, particularly at the moment, I don't think, as they're still grappling with digital transformation, COVID, supply chain changes, I don't think it's kind of that high up on their list of priorities, but it is a valuable thing for their consumers. So I feel like we offer good and novel value in an area that is not a focus for these guys. I think the other thing is that it's not something that the brands can so credibly address, because each brand's going to have quite a sort of partisan view. And the more retailers we work with, the harder it is for any individual retailer to start to create their own version as well. So so we're trying to roll it out to as many retailers as we can, as quickly as we can.
Right. Yeah, I like the approach. And kind of, I guess I'll wrap up with a last question here on kind of, I think one of the things I like a lot is that, you're approaching this as a B2B to C business, and, you can tap into a lot of verticals at the same time by being the packaging solution that works with, brands that can push it out as partners or customers of yours, however you want to think about that. But yeah, in terms of, either current or customers you're already in discussions with, what's been, some of the challenging aspects so far of like verticals that you're trying to figure out packaging for, and, how have you started to think about those challenges?
Yeah, really good question. I mean, I guess there's some quite exciting things as well. Like there is some new value that we can add. So there's things like being able to tell a customer when a product's going to run out of date, and we're looking at other ways in which we can tell a customer when product's going to run out, help with the ordering process. And so there's some kind of exciting new opportunities and value you can create just beyond the kind of saving waste and sustainability pitch. But I guess, it's quite new it's quite a sort of new proposition in the market. So we're keeping a fairly open mind around how we sell it. And, we've white labeled the proposition for one of our initial clients, and the others use their own brand. So I think, the thing about the D2C is you can control the growth, and, when you're working with business clients, the sales cycle is a bit longer and you can't control the growth in quite the same way, but the rewards are much greater. So I think, there's no huge blockers though. The one big fundamental fault line in reuse though is for sales between online and offline. So for online, most of the retailers have an inbuilt reverse logistics capability, so they can return the packaging to us. Whereas for offline, if someone buys packaging from a product in a store in London, gets on a train and they're 2 hours away, can they easily return that packaging? Because it has to be really easy. And I think that's the piece of infrastructure that needs to be worked on long term. It's something that we are looking at. So we're looking at distributed networks for returns. And I guess the point is you have quite a valuable asset to return. So there is margin to play with the return of that asset.
Yeah, that makes sense. Appreciate it.
Thank you very much. Thanks, Jason.
And Matt, do you want to go next?
Yeah, so I guess going now to like the supply chain side and actual refillable container. So do you have any IP surrounding the container itself? And if so, is there some material innovation that makes your packaging superior or just differentiated from either alternative types of reusable packaging that we're seeing for food grade, either single use or multi-use plastics? Or is it more so on the whole process that you have developed for the supply chain itself?
Yeah, so there's no specific IP around the design or the materials we're using. I mean, it is the product of, processing over 700,000 items, in-depth, studies in the home and the supply chain. So it's the sum of a lot of work and insight. And I guess the way we think about, because I suppose the question ultimately is about how defendable is this? Is there a kind of moat here? And as I was saying earlier, I think the more adoption you have, the more defense you're building, because it just becomes cheaper and cheaper for new people to use your system against someone else's. I think the digital infrastructure also helps, because I mean it provides us with a lot of the efficiencies in the warehouse and the reuse cycle. So when a load comes back into the hub, it immediately passes through this kind of RFID arch, and each individual pot there's a relationship between this pot and the specific product that's been in it, the specific batch, the specific customer, and the specific customer order. So you're automatically reconciling that when it comes back. So you're saving huge costs from doing that, but you're also starting to build the rails for reuse generally. So the next thing we're working on is with our retail partner to tap into that functionality so they can have the same kind of relationship with their customers and the packaging. So I think that makes the whole thing get stickier and stickier and harder to replicate. But I think we want to be in a position where we're creating a system that's both very easy to use but open for others to use as well. We wouldn't want to say that no one else could use their packaging in our system, and ultimately we wouldn't mind if other people use the same our packaging dimensions, but created it themselves. It would just be more efficient then for them to run things through our infrastructure, our digital infrastructure.
Mm-hmm. And then to follow up on that, and this is kind of tapping into the more grand vision with the reuse hubs is as you're thinking about risk bearing and ownership, what do you hope to own as part of this full vertical stack? And then how do you think about the logistics and maintenance that go with this as well?
Yeah, good question. I mean, I think things change over time, right? So initially, we want a high level of involvement. I mean, we don't own all the assets, so we lease the cleaning, filling, labeling, all that tech is leased, and so all fairly kind of capital efficient. And over time, we would imagine going from a service. At the moment, we provide the product, so we can make a margin on the product as well as the packaging service. But over time, we would just be providing packaging as a service. And ultimately, we might provide people with the tools to set up their own physical infrastructure as well. So I think the thing that we'll ultimately retain is the digital infrastructure. But as an early player, you have to be fully vertically integrated. You have to provide the full solution. Otherwise, you don't have a proposition. And the benefits of the proposition from being a fully vertically integrated solution.
So as a follow-up question to that, Peter Thiel says it's best to be the last company to do something, not the first. So are you the company that will be the last one to do this, or are you setting the groundwork for other people to come and usurp or override you?
Well, we're not the first. So we've definitely had the benefit of learning from a few others in this space. I guess the most prominent is a business called Loop. And, they've been really valuable pioneers in the space. I think, we don't envisage that there'll be one player to provide one solution for every region and every category of packaging. But I think over time, we feel that it's the digital infrastructure that we want to increasingly own. I guess, that's a concern, but I think why I'm encouraged is that we're already solving the problems for businesses that are looking to provide this to customers who are buying it frequently. So, I hope that we can continue to build on that foothold, and we seem to be at the moment. So, yeah, let's hope. Yeah.
Awesome.
So we're not the first, yeah.
Yeah, you're not the first, not the last, but hopefully you will be one of the greats. We need to transition things over to the next startup of the night just to make sure everyone has time. So thanks for pitching, Ben. Thanks for the feedback, investors. Now let me take you guys out of here. And it looks like we've got a major focus tonight on packaging and plastics specifically. So we might as well keep things in the plastics and plastics waste side of things. We were talking single-use packaging and plastic. How about we kick it over to Carlo with FlexSea, who's trying to replace single-use plastic with sustainable seaweed. How's that for a kickoff, Carlo? You ready?
Hello, everyone. Yes, of course. Let me just share my screen.
Awesome. And then let me know when you are good. You'll have 5 minutes before the Sharks tear into the pitch, hopefully have some good feedback, and you get some interest on the company. Ready to roll?
Absolutely. Let's do this.
Let's do it. Time starts now.
Here we go. So, hello, everyone. My name is Carlo, CEO and co-founder of London-based startup FlexSea. So, as we all know at this point, we all have a huge plastic problem. Around 1.2 billion barrels of crude oil used every year just to produce plastic. And because how it's mismanaged at the end of life, a lot of it actually ends up in nature. In the ocean alone, about 12 million tons per year, which is equivalent to one whole garbage truck per minute. These over time degrade into micro and nanoplastics that make their way all the way up to us through the food chain through a process called bioaccumulation. And with plastic waste predicted to double to 760 million tons by 2034, we need to do better, especially because existing solutions such as recycling are not viable. Just under 10% of plastic globally is recycled, and existing bioplastics on the market are all derived from scarce resources and food crops, which require arable land and fresh water to grow, as well as pesticides and fertilizer assistance throughout the growth cycle. And at the end of the day, they're not truly degradable. They will only degrade in industrial composting facilities for the most part. Which is why at FlexSea, we are leveraging naturally occurring red seaweed biopolymers to replace those materials. We're developing materials that are truly home compostable, but they will degrade in nature within 8 to 12 weeks post-disposal while being shelf stable. In fact, our materials are so natural you can even eat them. And because of how we are not classified as plastic on the legal side of things, we actually help companies avoid all EPR laws, plastic bans, and plastic taxes. What we have developed so far are thin films to replace single-use flexible plastic packaging, and that's what really started the project. And over the past few months, we also have developed a whole new second vertical, which is extrudable pellets, which are compatible with existing injection molding machinery to replace rigid and semi-rigid plastic packaging. And in the future, we also want to go into coating and adhesives very soon. Why use red seaweed, you may ask? Well, red seaweed grows faster than any crop. While sugarcane and beetroot might take anywhere between 6 months and 18 months to grow before you harvest it, red seaweed grows in just 45 days. It's grown sustainably at a very large scale, a scale enough for us to produce 3 million tons of our materials literally tomorrow morning. And it sequesters a whole lot of CO2, much more than any other land crop, as much as 2,000 tons per square kilometer of ocean surface area that is cultivated. The market for plastic packaging, as you might expect, and you probably know, is huge. This is a snapshot of what it will look like for the films and the flexible plastic packaging alone. $100 billion every year are used in single-use flexible plastic packaging, and there's roughly a 70 to 30% split between food and non-food applications. In the UK, this represents for us a £5 billion opportunity. And what's really interesting is a 17% compound annual growth rate for compostables across all industries. Where we want to position ourselves is use our patented formulations, for which we already have one patent on the films, one more coming up in the next few months for the patent for the extrudables, and another one in our pipeline for a biotechnological application as well, and lease those IP formulations to existing plastic manufacturers who can use it to integrate our own materials into their portfolio of offerings. This allows us to keep our CapEx as low as possible, leverage their production capacity, their own portfolio of clients, as well as it allows us to scale very rapidly. We find several of these players in different geographic locations. Where we want to work and invest in is upstream, looking into biorefinery and the actual processing of the seaweed and improving the yields of those extraction processes, which in turn will help us to make our materials even more sustainable and cost-effective downstream in the long term. We have gathered a lot of traction from the market with letters of intent and people willing to use our materials as soon as it hits the markets, all the way from small startups like us and slightly bigger SMEs to larger players and the multinational corporations such as DS Smith and P&G, with which we have planned pilots by the end of next year. We also have secured seaweed supply from 2 main suppliers, one based in Indonesia and one based in Madagascar, in order to have raw material to work with and to secure different geographic locations to kind of de-risk our sourcing. The core team is made of myself and Thibaut, my co-founder, as main founders. So myself having a background in business management and entrepreneurship, and Thibaut being a material science and engineer. Mattia, our very first hire, is a PhD in bioprocess engineering and biotechnology with core expertise in extrusion and bioprocess fermentation. And there's also Andy, which is not in the pitch because he's a very recent hire, who in fact is a PhD in formulation chemistry, which has worked in the Nestle confectionery industry in the past. We're followed by a tight group of advisors, both on the business side and on the academic and research side, to kind of guideline our R&D and where we want to go with our journey. And we have raised a pre-seed round early this year, with which we expanded the team. So it was only us co-founders. Now there's 4 people working full-time and a bunch of interns rotating. We expanded to better lab facilities and did a whole lot of industrial trials to de-risk the whole process and make sure that our current materials are both
time is up. Sorry, I forgot to give you the 1-minute warning. I try to keep the phone open, but it then turns off the screen itself. Let me, how much are you guys raising while I pull in the other investors? Want to share a little bit more?
We're currently raising £2 million to go to market and bridge the end of R&D, planning to go to market by around end of Q2, beginning of Q3 next year.
Very cool, very cool. Well, thanks for presenting. Thanks for sharing. It's definitely a fascinating market. The question is how it turns out and how low you can get the prices. While I bring in the other investors, can you talk a little bit more about your plans to reduce costs and to have a kind of cost competitive bioplastic?
Of course. So I think I'll start by giving an overview of what the plastic costing looks like today. So I have petroleum plastic, which goes between $2.5 and $4.5 per kilogram. Then you have PLA, which is the most abundant bioplastic on the market today, which goes anywhere between $5 and $10 per kilogram, based on where it's made and the kind of grade you're working with. Then you have PHAs and PHBs, which are home compostable. Technology has been known for the past 40 years. However, it's failed to scale because of how complicated it is to make them. And they go between $10 and $15 per kilogram. Right now, at our price point, we are between $10 and $12 per kilogram. So we already are competitive with the higher end bioplastics on the market today. And we have concrete plans to reduce our cost to the $5 to $7 per kilogram, mainly by working on the waste which is created during the seaweed extraction and integrating that waste as much as possible, either by generating valuable components which we can use to increase the properties of our material, or just integrate the waste in a raw form into what we do, essentially with the aim of increasing the output ratio between raw biomass of the seaweed and our output material. If we can produce more with the same standing biomass at the same cost, because the waste is essentially given to us for free, we can just slash the cost because we're producing more at the same price point. So that in a nutshell is how we plan to do it.
Understood. Matt, do you want to kick things off? Questions from the Vector side?
Yeah, so it's actually like a personal hot topic of mine, using seaweed for plastics. So I guess first and foremost is you're using red seaweed. That has been a hot demand item over the last 2 years for not just for the bioplastic industry, but for a whole suite of macroalgae to X product value. How are you securing your supply chain, whether through some long-term supply contracts with people in East Asia or South America, or do you have any other methods of making sure that supply chain is there, and especially for the species of red algae that you need?
Yes. So as I said earlier in the pitch, we have secured supply from 2 different suppliers, one of which, Variocean, is actually a company which is working on the traceability of the whole supply chain itself. So you'll find that the red seaweed supply chain right now has been kind of spread and it's not really easy to follow because of so many players in it and so many hands which the seaweed exchanges before it actually reaches the end buyers. What these companies are doing is they're tracing the seaweed they're selling all the way back to the farmer in Indonesia, Philippines, or wherever it is that they're making it. And that is one way to secure, in fact, the sustainability of the seaweed. We have a material which has the potential to be carbon negative. There's no point of us using a seaweed raw material which, yes, it absorbs CO2, but before it reaches us, it's gone three times around the world. That's not what we want to do. Talking about just securing the seaweed itself, yes, we're going out to seaweed manufacturers. We also visited seaweed manufacturer and extraction sites, different ones, in fact, to understand exactly how it's made, where it's coming from. And so we have direct relationship with those companies. We're not buying retail, we're going all the way up to the manufacturers. And seaweed supply, yes, it has increased a lot in demand in the past few years, but you'll find that the supply itself has also increased a lot. Since, I think, 2011 was the first projection that was made. They did 10-year projections on how much red seaweed would be produced. And in fact, they had to review these projections every 4 years because by then, that 10-year projection number had already been exceeded. And in fact, the only curve in production, the only kind of dip, has been seen during the COVID lockdown period. And the reason was because of a lack of demand, not a lack of supply. We've talked with suppliers and farmers in South America, for instance, which is not a big hub, but has a huge potential to become a big production hub for the red seaweed. And they told us that the reason they're not producing more is because no one is buying their seaweed. So there really isn't a problem with the sourcing itself. And we're tapping into a very well-structured and very mature raw material pool already. And that's why we're using red seaweed rather than brown seaweed, because it's more cultivated, and also the polymers that you can find in them are different. So it allows us to have better properties in our material.
Mm-hmm. And then following up on that, actually now on the downstream processing of this. So how, given that you had validation testing, how does this hold up under, using contract manufacturers for production? How does it hold up in existing injection molding machinery? And also, too, how does that relate to either producing rolls or pellets for these materials, whether or not before or after end sheets?
Of course. So the films and the pellets that you can injection mold with, we produce in two different ways, but both with existing machinery. So the films are producing through a die casting technique, and the pellets are just compounded on twin screw extruders. So both of them are existing industry machinery. And once you create the rolls with die casters, you just have rolls of material which you can load onto flow pack machines and such. And essentially the material is transparent, can be printed on it, can be colored, and can be heat sealed. So it just behaves like plastic, just a matter of setting the correct speed on the machine. Because modern machines are essentially large computers with robots attached to it, you just have to plug in the parameters that you want it to work at, and it will do so. With the pellets, so once we get the pellets through the filament chopping up, essentially from the extruder, you can just load them up on existing injection molding machinery, and we have successfully injection molded different items such as just plates and dog bones for material testing and property testing of the plastic. So both have held up pretty decently. Just a matter of setting up the parameters, really. We don't melt at the same temperature as plastic, so you won't use the injection molding machine at the same temperature as plastic, for example, but just a matter of putting the number in.
Sounds good. And then do I have time for one more question?
Yeah, go for it.
All right. The last one is, given that, you're going after the LDPEs and polypropylene to the market, these are commodity plastics at $5 to $7 a kilogram, at scale. How do you justify the slight premium, and how do you actually get the cost parity from there?
So we recognize that cost is the main driver in demand for packaging from the producer side. You can be the most sustainable company out there if your material is 10 times more expensive. Unless they're held at gunpoint, the buyers won't buy it. That's why we have those plans to decrease the cost to become as competitive as possible with petroleum plastic. Petroleum plastic, which we believe will increase in price in the future through plastic bans, plastic taxes, and just rising oil prices in general. So even though we will probably never become as cheap as they are today, because they will increase over time and will decrease over time, the delta will definitely become much smaller. And what we can sell as a storyline is we are the only material which is truly home compostable and potentially competitive on an economic point of view. So if you take PHAs and PHBs, they're probably the best material out there today because they're not derived from petroleum and they do degrade in nature. In fact, PHAs and PHBs are a natural part of the marine carbon cycle, but they're just incredibly expensive to produce and they're very limited in quantity as well. We already are kind of on the cheaper end of the PHAs and very soon cheaper than PHAs and PHBs. So those are the ones which we really see we're competing against. And because we do degrade in nature in natural conditions, unlike PLA, which is the cheapest and most abundant bioplastic out there, we believe we can be a very compelling packaging alternative for companies initially higher end who are looking to have a more sustainable approach to their things, to their operations and how their consumers demand. But at the same time, down the road, also for major players. And that is shown by the companies for which we had demand for. I mean, P&G definitely looks at sustainability, but they look at cost because of the margins they are, and yet they are interested in our material at our current price point.
How much are they interested in, though?
So I can't say too much because it's kind of confidential, but essentially we're planning to do a pretty large scale pilot starting the end of the year for their cosmetics range. So we integrate our material in their existing products, essentially.
To replace all of their existing, or so they can have a PR push?
For film.
Okay, I want to kick things over to Taj now. Taj, do you want to Taj is here with Include Ventures. You want to share briefly just what you guys do at Include Ventures, Taj? His video's got to be off. Long story, but Taj is a great investor, and I'm sure he's got some good points here.
It's actually a short story, and I'll share it now. But it's also about why we need to do what we're doing. So I'm currently in treatment for dialysis. I go Monday, Wednesdays, and Fridays at 4 a.m. to 9 a.m. The reason for that is because there were environmental factors of where I grew up in Dallas, Texas, that impacted me and many other people. So I say this, and I'm very clear about it, and very public about it, because I want us to know as investors and as founders, the products that we're making is not just about the earth going for 2 degrees Celsius. It's really about now, and about people who may not look like anybody else on this call, who are coming from communities of color, poor communities, not just in the US, but in Europe, Africa, and beyond. So I'm Dr. Taj Eldridge. I'm a co-founder and GP with Clue Venture Partners. We are a US-based fund that focuses on two things. We invest in other venture funds that are focused on climate and other factors, as well as co-invest alongside of them in the areas of Series A and Series B. Some of the areas that we're really interested in on the climate space include food innovation, transportation, energy distribution, circular economy, and waste reduction. So looking forward to hearing some of your pitches and everything else. I'm going to go off camera because you can imagine it's probably better to see this square than to see all this medical stuff behind me. So thank you, Matt, and thank you, everyone.
Oh, I'd forgotten to put the spotlight on you. I didn't know you wanted the camera on. Sorry, but I think either way, that's something important for us to remember is this isn't all just theory. There are real lives at stake, and I mean, single-use plastics are one of the big ones. One of the biggest questions I have is you're growing this right now, or suppliers are growing this in our oceans. What's the effect of increased salinity on seaweed growth in the future as humanity tries its darndest to ruin our oceans? Can seaweed help? Is this something where you have more problems as the situation destabilizes? What does that look like?
So seaweed growth and seaweed cultivation is, I don't want to say a cure-all, but it's almost too good to be true. So you'll find that where there are seaweed cultivations, there is increased biodiversity because seaweed creates a kind of a barrier. It slows down incoming waves, protects coast from erosion. It supports the livelihood of about 500,000 families of seaweed farmers in Indonesia alone. And just underwater, the carbon that seaweed takes in is through the form of carboxylic acid. That's what carbon is when it is dissolved in water. So because it's an acid, in fact, the CO2 absorption of seaweed is directly contributing to deacidifying the oceans, which is a big issue right now. Salinity-wise, it has not been an issue for the seaweed cultivation itself. Of course, there will be limits. You cannot grow the seaweed in the Dead Sea, but by the time the ocean becomes a Dead Sea, we'll all be dead anyways. So I think there's going to be bigger problems than not growing seaweed at that salinity point. When it comes to general seaweed cultivation, there really is no harm. Absolutely. The red seaweed, the way it's grown, it's essentially tie it at regular intervals on a line of a rope, set from the coast to a couple hundred meters off the coast. And the little seedlings, technically they're called propagules, that's what the name of the baby seaweed is, grows in 45 days, harvest them, and as long as you leave a tiny bit on the rope, through vegetative propagation, it will actually grow back into a new bush that you can harvest again. And because those species do not anchor themselves to rocks, there is no issue that if a piece breaks off, it will grow into the local ecosystem and become invasive. That does not happen with red seaweed.
And we've seen a lot of attempts with seaweed, with algae, etc., to create sustainable climate solutions, both for carbon capture, for alternative proteins, for alternative plastics. And there hasn't been a lot of success. Why do you think that is, and why will you be different?
So when it comes to protein, for example, I wouldn't say it hasn't been a success. I think it's just been a case of mislabeling. Seaweed protein content isn't very high. Of course, you can derive seaweed protein from the raw seaweed biomass, but selling it as just purely seaweed is wrong. And there are many companies that that are using seaweed as part of their own alternative protein content, whether it's for making fish alternatives. I think companies like Betta Fish, for example, and that kind of alt protein sphere, all the way to even meat and bacon. And that's one side. When it comes to biofuel, there's been a wrong approach to how much oil you could actually extract specifically from microalgae, and microalgae is pretty unsustainable to produce as well. It requires a lot of energy, it needs to be centrifuged, and a lot of space for very little yield in the end. And that's what kind of burst the bubble, especially in Silicon Valley and towards the first 2010s. With biomaterials, really, I'll say that there hasn't been a specific failure yet. There's several companies in the sphere. We're all running up towards the same goal. Big market, not going to be one single winner, especially because all the materials are slightly different. Just like today, you have several different kinds of plastics. There's not one size fits all for plastic applications. There won't be one size fits all for seaweed bioplastic applications. So it's a matter of finding your niche and where your material performs best and try and go for it. There's no truly seaweed-based biomaterial on the market today. We plan to be among the first ones of them.
Very cool. Very cool. Then to keep things moving, I would kick over to Jason. Do you have any questions for the team and FlexSea?
Yeah, sure. And great presentation. A lot of my questions answered already. But just in terms of like competitors, not necessarily other bioplastics, but if you're looking at companies even switching from traditional plastics to your products you're creating, like who would the main competitors, or what would be a comparable company that you want to be seen replacing from your end customers?
Well, in fact, I'd say that those companies that you call our competitors, I call them our opportunity. We don't want to replace the Barrys or the Amcors or the Mitsuis, the biggest plastic producers and distributors out there. We've actually talked to them, and they are aware that they're selling what essentially is a dying product, and their own customers are demanding a more sustainable solution. So when it comes to existing petroleum plastic producers trying to switch, we want to be the ones that allow them to be the switch, be the cheap source of R&D for them, license our technology to them, and leverage what they're already doing. They're a huge company. If we can use them to sell what we're doing, it's a bingo on the way I see it. If you look at other bioplastic companies, bioplastic from seaweed, what really makes us different is the seaweed we use. The majority of them use brown seaweed, smaller share of the market, non-cultivated, grows in different areas. So you have limited production because they live in colder, they grow in colder water areas. And the biopolymers you use are different. So it means we actually have different properties of the material. With red seaweed, you can have transparency, you can have heat sealability and better gas properties. With brown, you have at best a translucent material, which is not heat sealable and has worse gas exchange properties. Just to cite one, we had to run tests on the oxygen barrier machine 3 times because the machine was broken, but in fact, nothing was going through. We have better barriers to gas than existing LDPE plastic. And that's thanks to polymers we use that are only found in red seaweed.
Great. And is there any like residual smell from the seaweed that's used in production?
No, not at all. There's a very neutral smell. There's nothing of it, and even I mentioned earlier, you can eat the material. It's tasteless.
Okay, and how much, or is this a vertical, or how much is a factor is kind of the movement towards either commercial 3D printing or printing at home and the use of biomaterial plastics in that space?
Yeah, funny you mentioned this because we actually have one grant here in the UK to actually 3D print cases with the base of the NHS to essentially replace inhalers for the inhaler casings for asthma inhalers, which can be 3D printed, and that's one of the things we're working on. So 3D printing goes kind of hand in hand with injection molding, as many things are 3D printed before being injection molded. It's just cheaper and faster, and our filaments are compatible with that.
Perfect. Yeah, appreciate the responses. Great presentation, and yeah, great questions all around.
Thank you so much, everyone.
Awesome. Thanks for presenting, Carlo. And remember, if you guys are watching this, tuning in, you can always reach out to the companies if you are interested in investing. None of this is solicitation, et cetera, et cetera. You know, all the regular rules apply. We're not giving financial advice. If you're an accredited investor, you can learn more about us and what we do at Forward VC and our accredited investor syndicate. And just check us out, forward.vc. And of course, all of this is brought to you guys by Valbon by Carda, which is the best way to set up SPVs. It's what we like to use for Forward. It's the kind of simplest, safest, most compliant way to put money into awesome companies and help them grow and scale, which is more or less our bread and butter at Forward VC. We like to say we're not going to be the biggest check, but we'll be the biggest hustler there. And I think you can ask our founders and they'll tell you that. We've been doing plastics. We might as well keep it in the plastics field. Jason, you want to tell us a little more about bioplastics and what you guys are doing at ZILA Works?
Sure. Hello, everyone. I'll grab the screen.
Awesome. You've got your screen up there. Tell me when you are live and I will kick things off and good to go.
Ready to go.
Let's do it.
Great. Hi, everyone. I'm Jason Perko with ZILA Works. And at ZILA Works, we've developed a new industrial bioplastic to reduce the carbon footprint for materials critical to a net zero future. Epoxy resins are a type of industrial plastic used everywhere. It's in our homes, where we work, where we learn, it's where we play, it's in the tools we use and how we get around, and even in the energy we create. Unfortunately, the 4 million tons of epoxy resin we use globally each year have a heavy carbon footprint. Product manufacturers are being pressured to reduce their carbon footprint for a variety of reasons, from retailer requirements, regulations, and carbon markets. ZILA Works uses plants to create a drop-in epoxy replacement for a number of different applications. We've identified clear steps to a 60% reduction in carbon footprint compared to petroleum-based epoxies. Our patented process uses vegetable oils like hemp seed and linseed oil, and using specific formulations creates a high-performance bio-epoxy resin system that product manufacturers can adopt without any retooling. There are only a few companies that have been able to create a bio-epoxy resin. However, ZILA's resin delivers better performance and 4 times the carbon footprint reduction. ZILA holds the global exclusive license to 4 issued and 3 pending patents. We're well positioned for new IP, and we hold exact formulations as trade secret. Epoxy resin is an $8.5 billion global industry and growing. Our go-to-market strategy starts niche, then expands. The ski and snowboard industry are the ideal early adopters who can give us rapid feedback and help us demonstrate viability in demanding real-world environments. That industry is quick to adopt new technologies, they have high margins, and they require high performance standards. This is our COO on skis made with our bio-resin, testing in extreme conditions. These early adopters will help us scale to the mid-size market, specifically the floor coating industry. Serving those mid-sized customers helps us to increase our production capacity to reach larger market segments, global manufacturers in sustainable energy production and transportation. ZILA is targeting strategic customers with aggressive ESG goals. We're launching a paid pilot with Burton Snowboards this month. Burton will use our bio-resin across several board lines over the winter to qualify our resin for full adoption. That will become about a $3 million annual contract. This month, we'll also be delivering samples and setting up paid pilots with 10 additional outdoor manufacturers. Patagonia is leading our floor coating efforts by exploring use of our bio-resin on the floors of their retail stores. Vestas, the world's largest wind turbine manufacturer, consumes approximately 100,000 metric tons of epoxy resin annually, and they're actively seeking carbon reduction and end-of-life strategies for their wind turbines. Vestas recently selected ZILA Works as a winner of their Call for Technology Challenge. And folks in the automotive industry, we're in conversations with because they're reaching out to us as they electrify their vehicles and need to use more composites for lightweighting. Each of these markets require a specific formulation, which is why ZILA is more than just a bio-epoxy manufacturer. We're a custom formulator, providing the highest value add in the epoxy supply chain, so we can sell our resin system to our product partners as a drop-in solution. Our product margins are around 30%, depending upon the application. We've brought together an amazing leadership team. Jeff's 40 years of experience makes him one of the premier polymer formulators in the world. Evan is a world-class athlete and engineer who has taken ideas from napkin to full-scale production. Brad has experience in international finance and taxes. And Andy is a 17-year veteran in the outdoor space. We have multiple researchers advancing our technology in parallel under the guidance of the ZILA leadership team. The University of Alberta is currently formulating for floor coatings, and the WSU team is formulating for wind turbines. We have a clear pathway to scale up and commercialize our bio-epoxy resin platform technology. We'll be at revenue in less than a year and growing to over 40 million within 4 years. We're opening a seed extension round in January to raise $4 million. These funds will allow us to scale the 10-ton batch size, complete additional pilots in the outdoor and floor coating space, and set up the team for commercialization with 8 critical hires over the next year. ZILA Works has raised $2 million to date, almost half in grants, and we have been recognized around the globe for our innovative technology that reduces the carbon footprint for materials critical to a net zero future. Thanks for your attention. I'm happy to answer any questions you may have.
Oh, great pitch, great timing, great everything. While I bring everyone in, when everything's great, there always seems to be something else. So what are we missing? What's the not great part, or what's the hard part with ZILA? What What's the thing that you don't want me to ask about and why?
You're welcome to ask about anything, but I'll be completely transparent. So we've demonstrated the demand for our product across multiple verticals. Our biggest roadblock is production capacity. And we're participating, wrapping up right now, the Heritage Group Accelerator Program out of Indianapolis. One of their portfolio companies is Monument Chemical, who has 4 chemical manufacturing facilities in the US, 1 in Belgium. They are helping us to scale to that 10-ton and then beyond capacity. So, but that's the biggest, essentially, roadblock to our endeavor. The biggest risk to the endeavor is scale up and bringing our COGS down. But we have a good partner in our corner now for that. I'm sorry, Matt, you're muted.
I am muted. Sorry about that. Very good. We'll definitely have more questions about that. But first,
Sure.
Taz, do you want to kick things off? What questions do you have for ZILA Works?
Great, thank you, Matt. And Jason, great presentation, I appreciate it. One of the things that always concern me as we're talking about this transition is that we don't have, and I think you just touched on it, the cost factor. You know, from the alternatives that are out there, and it's interesting, we've seen something similar to this for the sports industry, so I might love that. But are there additional ways that you can think about where the cost can be reduced? Because I think that's been one of the things that we've been seeing a lot of lack of use has been for a lot of the corporate partners.
Absolutely. In our conversations with Monument Chemical, we actually have a technical call lined up for this Thursday. They've reviewed our process documents in detail, and they believe they can, take our 5-step reaction down to 2 steps. So that will have a huge impact on COGS. We also have a proposal from Oregon State University to use microfluidics to potentially, reduce our OPEX, CAPEX, and our carbon footprint. Again, that's very early stage R&D project. It's not the focus of what we're doing. We're trying to get product to market as quick as possible, but we are seeing from multiple entities that there are pathways for us to reduce our COGS as we scale to commercial volumes.
Great, thank you so much, Jason.
Jason?
Sure. Yeah, great presentation. I really like all the verticals you're after. Going after, in terms of they're all massive markets. You have a coating that seems to apply to a bunch of different verticals. And, you mentioned focusing and starting in on the ski space. What I guess the challenge on that side is going to be, compared to some of the other like plastics that are recycled more often, or, other sectors where it's something that's shorter life cycle use. What's the pitch, or how have the conversations gone in terms of talking to ski suppliers, for example, and saying, like, you need to really focus on your eco-friendly products now when we have the coating solution for you? Yeah, how have those conversations gone for
you? In the outdoor space, really well, because there's other entities like Protect Our Winters that have raised awareness about climate change and the impacts on outdoor sports and our abilities to play in the outdoors, right? So because of that, and the consumer pressure to manufacturers, and even retailer pressures like REI, which is a big outdoor retailer in the United States, they have product impact guidelines that's it makes all of their manufacturers not only track, but have a plan to reduce their carbon efforts or their carbon emissions, right? So in that outdoor space, those conversations have gone really well. There are, of course, leaders like Burton, right? That it has a long history of sustainability. And then there's others that are just now starting to step in that space and start to map out their carbon footprint. So yeah, with each manufacturer it's different, but they all are feeling the pressure to, in that vertical, to reduce their carbon footprint as quick as possible.
Right. Okay. And might be different in different verticals, but are you finding the best pathways in from the, from the brands themselves, from their manufacturers that can then go to their brands and say, this is a new product we offer and new eco-friendly solution, or you know, which inroads are going to be the most helpful for you?
Yeah, for each vertical, it's different. That kind of that strategy for sales and marketing. In the outdoor space, again, we have Andy Merriman, who is a 17-year veteran. He's been in every ski factory on the planet. He can, you know, say in one hand the number of ski factories has not been in. And of course, being at Black Diamond that has 35 product categories and 5,000 SKUs, his relationships extend beyond skis and snowboards to wakeboards, kiteboards, surfboards, kayak paddles, etc. Right? So we're identifying right now the 10 additional product manufacturers we want to work with besides Burton that have the right values alignment and have those corporate sustainability goals. They're going to run much faster to full adoption, just like Burton is doing. Right? So in other verticals like automotive, those folks have more of a 3 to 5 year timeline for adoption of biomaterials. So it's not, you know, the front end. Again, it's a very large market, high volume, low margin, but it's not the front end of our roadmap. We want to get our production capacity scaled up. In the floor coating space, there are certifications like LEED version 4 and Living Building Challenge, Living Product Challenge. Even in Washington State, where I'm from, the governor is now tracking embodied carbon for all new government buildings. Right, so there are regulatory and certifications giving incentives for developers to adopt more lower carbon materials in the built environment.
Right. Okay, great.
So you mentioned bringing down the costs for the production scale, and as you try to make this more into a mainstream market, one potential, I'm just curious to hear your thoughts on, as hemp becomes more used in more applications, what that will do to your COGS of producing. Right now, the costs are relatively low because there's not a lot of demand, I would assume, but will demand and supply be proportional? How do you see that affecting you going forward?
Yeah, we actually started ZILA Works about 9 years ago, and the first 4.5 years was just market analysis. We recognized, one, we need to move away from extractive resources to renewable resources, and two, that there's a burgeoning market opportunity with the eventual legalization of industrial hemp in the US. And so we took the first 4.5 years trying to figure out what's the highest value added product from hemp that we can produce from the highest value part of the crop. So we take the seed oil and go through a patented process to convert it to a bio-epoxy resin, the kind of best performing type of plastic that we make currently. We've also recognized that in talking with farmers, we've actually got farmers from Alberta that have invested in ZILA Works in the previous round. They represent about 87,000 acres of potential hemp cultivation. So we have our near-term supply chain locked up, but of course, servicing Vestas at 100,000 metric tons of epoxy resin a year, we're going to have to, you know, diversify that. So we've talked with farmers not only in the US and Canada, but globally as well. As we've recognized that farmers need to do full crop utilization to really make their money back. So we're taking the seed oil that still leaves the seed cake for protein, leaves the bast fiber for textile industry, leaves the herd for either animal bedding or construction purposes, and of course the carbon sequestered in the soil. So we're actively collaborating with other hemp processors to do full crop utilization. That gives the most amount of equity back upstream to the farmers. And then consequently, instead of the farmer trying to make all their money back on the seed oil that they're selling us, that's going to bring our price of our seed oil down over time, as well as that full crop utilization comes into play. I'll also take the opportunity to mention that our IP around our process is not limited to hemp seed oil. It's all vegetable oils. Of course, not all vegetable oils are created equal. We can use hemp seed oil, linseed oil, sunflower seed oil, rapeseed oil as good feedstocks for our patented process to create high performance bio-epoxies.
Oh, very cool. Very cool. What about, you've got cannabis in your presentation as well. As that becomes legalized, can you use cannabis oil as well for the epoxies you're creating? No.
Different type of oil from like the marijuana side for CBDs or what they're using for medical or recreational, completely different varieties of cannabis that are being used.
Okay,
And the
so
oil
you
is
can't
different
use
as well.
you can't use the waste from there. Okay, understood.
We can potentially use the fibers from that industry to combine with our resin to make like mass ply panels. We have an active grant right now with Oregon State University. They're going to be looking at our resin for cross-laminated timber and mass ply panels. So they're specifically trying to address the waste, the fiber waste from the marijuana industry.
Understood.
Prevalent in Oregon.
So you took 4.5 years to get here. What brought you to that point 4.5 years ago of deciding you wanted to do something with hemp? And why did it then take so long to get here?
Well, we started 4.5 years ago while we were in grad school, getting our MBAs in sustainable business. And again, we knew that there was going to be an opportunity with industrial hemp being eventually legalized. We, just took 4.5 years. We started off with a bioplastic for 3D printing. We pivoted to hempcrete for green affordable housing. Like many startups, you pivot and hear feedback from investors and talk to farmers and the marketplace. And construction moves a lot slower. And we eventually landed back on a bioplastic and got in touch with the researchers that we had previously collaborated with. And it turned out that they had created this bio-epoxy resin from hemp seed oil. And of course, me and my previous co-founders didn't know anything about plastics at the time. And, I ended up rebuilding the entire team now around the epoxy resins and the applications of epoxies. So yeah, first 4.5 years was finding our way through grad school and landing on what's going to be our kind of the leverage point to drive the entire industry forward, is creating that high value product.
Understood. And you won a prize from Vestas?
That's right. We won the Innovation Challenge through Foresight Canada, a cleantech accelerator program that we're alumni of. Vestas essentially was looking for folks that can help them not only reduce their carbon footprint, but deal with the end of life of their wind turbine blades. One of our patents is for a vitromer epoxy technology for recyclability at the end of the thermal set. And we actually have an active grant right now with Washington State University. And we just checked in with the researcher about a month ago. He was able to prove the formulation that we have using our hemp-based epoxy with the vitromer technology not only is outperforming the BPA or the petroleum-based epoxy in the lab, but he was able to chemically separate the epoxy resin and recycle it, as well as the carbon fiber in full length tact. Again, at lab scale, still nascent technology, but a huge value add for what Vestas is doing.
If it's such a value add and they're so excited, why didn't they buy the company or offer to invest?
They have. We're talking to their venture arm, and they said that if the resin tests well, they'll come in our Series A. We're actually scheduling a call for a check-in with them now at the end of November, beginning of December, to let them know the results of our formulation. We'll be sending them a 1 to 2 kilogram sample for testing in their lab. We've also developed a relationship with NREL, the National Energy Renewable Laboratory in Golden, Colorado. They can do prototyping up to 13-meter length blades. So we're essentially, our ask to Vestas is, hey, help us fund the ongoing research. Of course, wind turbines, there is a lot longer time to market because you have so much internal protocol testing as well as external certifications to get through. It's about a 3-year cycle, NREL told us, to go from coupon testing to 13-meter length blades. So we've got that relationship now with NREL. We're going to ask Vestas to fund that ongoing R&D. They're not interested in becoming an epoxy manufacturer or supplier, but they'll help us scale up so that they can adopt our resin across their wind turbines, assuming the resin tests well. So that's the stage that we're at with Vestas.
Very cool. Don't give up any right of first refusal or anything that you may regret later. Having CVCs on board can come with its own set of headaches, so to speak. But thanks for pitching. It looks very promising. I'm very impressed by what you guys are doing and what you're turning the byproduct of hemp into. I want to make sure we keep things moving forward so everybody gets a chance to pitch. And I'd hand things over to Christian with Pawprint. And while I do, I just want to say that if you guys are watching this now, All of this is brought to you by Carta by Valbon, again, forward.vc/Carta, and Forward VC's Climate Investor Syndicate. If you're an accredited investor and want to learn more about us and what we do, that's forward.vc, the number forward.vc. We're investing in companies that move the world forward, kind of like some of the ones that you see here. And today we've got somebody who's doing exactly that, Christian. You ready to take things away, Christian?
I am just about ready. Can you hear me okay?
Just about ready. Perfect. Hear you loud and clear.
Excellent. Okay, folks. So for me, when my father committed a crime and spent a night in prison, it was quite a shocking experience. He had laid down as part of Extinction Rebellion and blocked a road here in Edinburgh in Scotland. And he sat me down and he said, Christian, what are you working on? I previously had set up a tech-enabled translation business, and I think I was complaining to him about Brexit over here. And he said, son, Brexit is really a pimple. It's a political problem that over the long term will go away. Climate change has massive implications for your children, my grandchildren, and humanity, and we'll see the breakdown of civilization if we don't do something about it. And so he got me thinking about what I could do as an individual, as a member of the sort of mass affluent West with my skills in a tech-enabled business. And I started to think about what you could do as an individual. And as an individual, you can obviously reduce your carbon footprint, or your Pawprint, as we like to call it. But once you do that, you get into diminishing returns. Because you know, we can't live like monks, like, you know, in the woods type thing. It doesn't gel with our modern way of living. And what I came to as a conclusion was that we, as I say, as members of the affluent West, the greatest opportunity we have to have a real impact in the fight against climate change, to build a sort of snowball effect of positivity, is through our employers, because our employers really can change on the basis of influence from their employees, from their customers, from their shareholders, and from other stakeholders. And so that's the background to why I decided to build Pawprint. You can see our non-judgmental polar bear icon, Bjorn the bear there, as a vehicle, if you like, the connective tissue for people within businesses to do what they want and can do on climate. You can see we've already got some of the UK's largest businesses, typically businesses with 3,000 plus employees as customers. And we've also got some large international companies like Vodafone. We've got major accountancy coming on board, and BlackRock, as well as Bain & Co. Coming on board. So we've got about 50 different customers. So what is the problem that we're trying to solve? So there's a lot of chat in our space about sort of two sectors. One is measuring carbon within a business, so the business level carbon footprint measurement, and the other one is carbon removal, or offsets, as some people call it. But the offset side, once measured, the offset side, according to international protocols, can only take 10% away. So there's a huge opportunity for technologies that actually support people to reduce through action. And one of the problems that businesses of scale have is that they will typically be like this. These green dots represent the people in the organization who are educated and motivated to do something about sustainability. And as we all know, if you've got, you know, just one dedicated team really on this, maybe a CEO who's got it, who understands it, who's educated and motivated, but a few people dotted around, real change is not going to happen. This is what you need. This is what the world needs. And this is what Pawprint delivers. So an organization in which all of the dots have been turned green, you have a climate-centric culture, but not only that, that organization is like a beacon of light to others, and you have dots turning green in other stakeholders, whether that's investors, job seekers,
1 minute
regulators,
warning,
or customers. I want you to meet Josie. So Josie is our the customer within businesses who has the pain that we're addressing. So this is where, so Josie has an ambition to, and this is based on a real person. She's a sustainability manager in a corporate with 3,000 plus employees and white collar employees. she has to reduce emissions by 46% in absolute terms by 2026, not using offsetting. This is her list of things that she's got to do. She's got to engage the entire workforce personally to make climate part of everyone's job. She's got to educate employees on sustainability and company objectives. She's got to reduce employee emissions, scope 3, things like traveling to work, traveling for work, work from home emissions, purchases, you name it. She's got to attract new talent. This is a real reason why companies are buying Pawprint as an authentic climate conscious company, not one that just buys its way out of trouble. And she's got to report on emissions and stay ahead of regulations. So we've actually got people who are already.
Your time is up.
Oh, you're joking. That's 5 minutes. Goodness.
No,
Okay.
I'm sorry. I'm sorry. That's 5 minutes. How much are you guys raising, and quick updates on where you're at with the company? I bring everybody in.
So these are our customers. Goodness me, time flies. This is what we've raised so far, 3.4 million. We're raising to get us to 1 million of ARR, and then we're going to grow to be much bigger in the US, which is our real opportunity. Sorry, guys, that was unbelievably quick.
No worries, no worries. One quick question I would have for you is, there's a lot of people trying to do employee engagement for climate. Why will you be the ones who make something massive out of it?
So my view is that so I've got a slide on that actually. It feels to me that there aren't that many who are doing it in the way that we're doing it, that are motivating people within the system with rewards, whether those are extrinsic or intrinsic rewards, and also who are aligning it very tightly to the company's objectives, including profit and loss. The way I see the sector, and I've got supporting information on this, is that there are about 18 different companies trying to do climate action. They tend to fall into like a Benevity or a WeSpire servicing CSR more broadly and without alignment, and quite established in the US, or more sort of focused on companies just like employees doing personal actions because that's a good thing to do and that helps to educate them rather than aligning them with the company's targets. So I think it's the combination of deep understanding of the motivation, both of the individual employees and the companies.
And how often would employees be using something like this? Is this a daily thing, or is this occasionally it's giving them updates on what they're doing and what they could do different?
It varies quite a lot. I mean, there are some who use it daily, but I think realistically, we want to get a broader level of usage across a bigger amount of the workforce. Like, it's when you get to sort of 25% of a workforce that you see real change happening. Our target is to get 10% of a workforce engaging quarterly, and we're hitting that today. So that's the expectation, because our value is not, like, it's not the value, the engagement itself is not where the value is. That's just part of the value. You know, if we get 10%, that delivers the business a certain amount of value that it can attribute to its P&L. If you get 15% or 20%, it doesn't become 50% or 100% more valuable unless that engagement is actually achieving something against the climate targets or the P&L targets.
And what kind of change on a per employee basis are you actually driving?
So it really depends where they're at. If they are, we joke, and I hope this joke isn't too sort of crass for an American audience, that within a workforce you have the Donalds, you have the Gretas, and you have the mainstream middle. So with the Donalds, you can imagine our ambitions are less. We just want people to be a little bit more educated about the difference and say, hey, I might try a plant-based burger, for example. I'm not talking about the man himself, okay? I'm talking about people like him. With the Gretas, we're saying this is a vehicle whereby you can engage people who aren't where you're at on your journey in a way that's non-judgmental, that's positive, and that's educational. But the real aim is for the mainstream middle, the people who are time-constrained, cost-constrained, to just start their journey, take little steps to contribute to their own personal reduction or their company's wider sustainability efforts.
Understood. Haj, do you want to kick things off on the next round of questions? What would you like to know?
Yeah, thank you, Matt. Really quick, number one, thank you for the presentation. Really great. Are you familiar with the site Miles or Get Miles?
I'm not, no.
It does incentivization. The reason I asked is because we've been seeing a lot of these types of companies, and it goes back towards the whole idea of true incentivization economically. So I think that it's really interesting on this. The question I have for you though is, you mentioned you were really going to kind of concentrate on kind of the mid piece of that. Do you think the message has to be different for those people who may not know about it, know about climate, or even care about it? How's the message different for that population?
I think the message depends very much on the employer. So it has to be appropriate for, their employer brand. And I think it's really important that they align it with the company's objectives, because if they don't, the Donalds and the mainstream middle who are closer to the Donalds are going to see it as being a sort of irrelevant bit of do-goodery. And I think that's a real problem for people who are trying to affect change. We're not all going to make changes to our lives because it's the right thing to do. We're not wired like that. And even though we have the best intentions. So we've got to contextualize it within the business context as being relevant to doing your job well and towards your business future-proofing itself, if that makes sense.
If you don't mind me jumping in here real quick. So I apologize for this might be a little bit, out of my typical scope. But in terms of either gamifying these incentives or creating some iterative response to recursiveness to using the platform or building up conviction to do more, what does success look like then for an individual or an entity to get to some greater vision that you have?
Brilliant question, and so critical to how we take this to be a sort of a business that's got exponential impact rather than, we just have to sell to a new corporate without any benefit to the existing people. We're starting off with some fairly simple and predictable gamification techniques. So for example, people earn paw points as they take on actions and they can vote for a climate-friendly charity. One of the means that we've got that has motivated people quite a lot is we run leaderboards and sprints that run for 28 days. So we found that teams within companies really want to, be the winner or have some exciting stories to share or somehow, be good actors within the community. What we've launched recently is benchmarking. So companies can see how they're getting on when it comes to the different actions that contribute to the Science-Based Targets Initiative, and they can learn from other members of our community. We've now got about 60 companies using it. What really works to make a sprint run? Is it the reward? Is it the fact that the CEO has said he's doing it or she's doing it and so on? Is it the way it's communicated? Is it the competitive thing? Is it aligning it with something else? There are quite a lot of different ways of doing it. But our view is that creates a bit of a competitive moat, us being able to share some of that data and insights, and that's closed within our system. But what we're looking at now, and we've actually launched it today in line with COP, is a sort of open competition. So you can see who are positively the most engaged companies and in what ways. And that's a sort of reward at a company level for really embracing this.
Mm-hmm. And then, oh, sorry, Matt, if you were going to jump in.
I was going to say, or a guilt trip way to get companies that aren't using it to start using it, which is probably even more effective.
Yeah, we'll try and keep it positive, and we'll certainly champion the guys who are doing really well rather than shaming people who are future heroes. Yeah.
And then to kind of go one step above, or really kind of go down to the foundation of Pawprint. So you started addressing on the problem at the beginning, but I'm curious to know what you think the real underlying problem is that the industry is facing and why we can't get people to be more climate conscious, just in general, as a lifestyle or as a corporate action as a communal entity.
I think that's a massive question I'd love to discuss over probably a few beers with you, but I think it's around the sort of incentives. So if you are in a job, like most people hate their jobs, right? And most people are there for the paycheck and, anything, and they're not engaged. And so if you ask them to do something that they can't see why they should, that's a problem. And I think the other thing is that there's a lot of science as to why, although we've got good intentions, we don't always, live according to them. And I think that fundamentally that's that we just have different pressures on us, and there's a sort of cognitive dissonance between those actions and so on. But I'm not an authority on that. I think it's a big problem to get people to change, and there's more work to be done on that. What we've got is a range of ways in which we can try and motivate people of different profiles, and experiment. Right, that's what our partners are doing very well with us. They're working with our product team to try different things, to get engagement up, to align it, and so on. It is tough, right? I'm not going to shy away from that.
Awesome, thank you.
What's it cost?
What's
the actual business model?
Yeah, the business. So it's currently a SaaS basis. So we charge based on the number of eligible employees. So it's to do with the size of the organization and the complexity of the rollout. But to give you a rough idea, 1,000 employee business would be roughly $30,000 per year.
Understood. Very cool. Then I want to make sure. Sorry, I would have other questions, but I think we've given enough time right now, just because we've got a couple other companies that still have to pitch. Any last questions for Christian, guys?
I just have one. Have you seen any of the customer verticals or any type of businesses be more receptive to using this versus others?
Definitely. Unfortunately, it's still a very, very much a middle class sport, and so we're seeing white collar companies take it on board. So tech companies, financial services, other professional services is where it's at for us today.
Okay, thanks.
How do you plan to change that?
Well, we've got a big market to go at with those types of companies. I think that as we will, so we're not trying to change it today. I think that as we develop a marketplace for sort of climate friendly products and services, I think some of the extrinsic stuff might shift that. If people can see, like, we save people about $500 a year on average from the changes that they make. When we can not just save them money, but actually give them stuff for free, I think more people will get engaged with what we're trying to do. So,
or carbon credits or something, or carbon credit lottery for employees.
Yeah, we're going to stay nice and open-minded on that, because we're going to do what works and what works at scale,
Very cool. Very cool. Well, then, thank you so much for presenting, pitching.
Thanks very much.
Now I'm ready to hand things over to our next company of the night, Krasi, with 13 Marie, and he's doing something a little innovative on the transportation and shipping side of things. Krasi, do you want to get your screen all set up and get ready to share a little bit more about what you guys are doing?
Yeah, definitely, Matt. Thanks so much for the invite, and it's a pleasure being here. So,
floor is yours.
What is 13 Mari? 13 Mari is a low-cost, innovative approach for reducing the vessel resistance, known as drag, the energy use, and the resulting fuel consumption in commercial shipping, also known as maritime. The opportunity is that the fuel cost is top of our minds, and it's the number one operating expense in maritime. The second driver is the International Maritime Organization mandating CO2 emission reductions with very aggressive targets, and not a single technology able to achieve those. And the third thing is the Poseidon principle. Commercial banks are behind them, and they're generally cutting funding for anybody who is not compliant with the new regulations. In this environment, let's reintroduce what our solution introduces the fuel. How? By reducing the energy that the vessel needs to transport goods. In the process, we're also reducing the CO2 emissions. In this moment, we came up with a product that has a pretty big addressable market, 6.7 billion. And this is with a product in the minimum viable product state. 45 million tons of CO2 emission can be reduced. This is why everything started for us, like Bay in the Caribbean. I was windsurfing, noticed structures, did research, turned out they're extremely persistent, very simple pitch, recruited a recognized NATO and DAPA partner as a principal researcher.
Can you guys see Crassy's screen?
I cannot.
I can't either.
So
it looks like your connection's not phenomenal. Try turning your video off and just doing the screen itself.
Yeah, let me do it. I cannot resume the sharing for whatever reason.
Here, give me 1 second. Let's hand things over then to Paul, and then I will open up your screen on mine when you do the pitch. Okay, Paul,
okay.
do you want to take things over with Infinite Polymer and share what you're doing to make recycling and plastics a problem of the past?
Yep. Yeah, no problem at all. I'll just get set up for you.
Awesome. You are in the spotlight. Get your screen up and ready to roll. And I will have us, for our last company, have Mari ready to rock.
Okay. Hi, can everybody see that now?
Looks good.
Thank you very much. Right, just a little bit about myself. Very similar to ZILA Works. I did a lot of research over a number of years to get to the point where I am with Infinite Polymer Solutions. And really, we're now in the point where we're looking to leverage the capital to get the POC, proof of concept facility up and running. So I will start off with the presentation from here. Very broad and bold statement initially to start off with. The only third generation plastics remanufacturing facility capable of 10 million kilo per annum. And that's a very bold statement. But when it comes down to what that bold statement means, it's actually quite achievable, because each year we can take the equivalent of 10,000 40-foot containers of waste plastic, 233 million 1.5 litre Coke bottles. That's half the largest container ship of the world. If one company can do that, why do we have a waste problem with plastics? We're still exporting 60,000 tonnes a month from where I live in the northeast of England. And that's just on one polymer. Out of the northeast, we have 240 tonnes a month going outside of the northeast into UK pre-processing companies to sell and clean and wash and generate exports into the marketplace. But we don't have manufacturing that can handle that in the UK. But we do, once we get Infinite Polymer Solutions, extrusions up and running. And we can produce 10 million kilos per annum of top class usable finished product for the building and constructions market. So when we do that, we get into a situation where we are tackling the problems. And the problems are timber. Timber growth, unprecedented requirement over the next 5 to 10 years. Prices increasing massively. Acute timber forecast shortages. Wood composites are starting to fail in the UK market and the global marketplace now because of the low quality that's coming out of China. And like a lot of companies have highlighted here, environmental targets are being unmet. 24 tonnes of plastic waste, for instance, goes into landfill, dumped into the sea and food chains every year in the UK. So what are we doing about it? Because everybody's recycling product from products that are in the marketplace and creating that circular economy. Circular economies are all very good, but they do not resolve the problem of what's there in the marketplace and what's coming into the marketplace, because the marketplace is now being driven by early doors of mining into the old landfills. And they're doing that and they're recovering gold and high quality materials. But the residue that is in there from the plastics, which over 60, 70 years of being dumped into the ground, is still there. We can take all of that, and we can take all of that and more, because at the end of the day, we need to deliver the products in the marketplace that are suitable for the environment, suitable for the construction marketplace, and the manufacturers that are doing that at the moment are not upgrading their product for future use. They're not future-proofing their products. They are leaving it as a standard product on a basic construction grade level. Our entry product has been proved and tested through R&D.
1 minute
better
warning.
than theirs. $92.3 trillion US marketplace. 8.5 billion of that is in the UK. Go to market. We have all the routes into the marketplace because we understand it through 10, 20 years of my experience in the timber and builders merchants industry, along with my founding directors. Competition, Goodell, Centriforce, Hahn, 3 of the largest players in the UK. Hahn Global, just opened an office in North America. What can we do? We have proprietary breakthrough technology, deep domain experience, scientific credentials, regulatory authority and influences, and we are in a preferential location in the Northeast and across the UK. Founded by myself, I have a sales director on board who will come on board full-time once we get the manufacturing facility on, and 2 leaders, Barry Davis and Chris Jones, both founding directors with myself.
Your time is up. What are you looking for to raise?
Overall, I've 2 phases, 6 million. First phase is 1 million proof of concept.
And what will the 6 million get you to?
There. We have full scalability, full design plans for phase 2. And that's what we're prepared to offer on a deal for initial proof of concept. 12% equity board member, phase 2 increase into 20%, 20% dividend from profitability per annum, and ROI on successful negotiation for exit.
Jason, you want to kick things off?
Sure. Yeah, can you walk through some of the either sales pipeline or initial, kind of that first group of early adopters that would be involved with?
Yeah, the early stage adopters are going to be the timber and builders merchants, the companies like Saint-Gobain, B&Q, 2 of the major players in the UK and European marketplace. My personal background has been Travis Perkins, working with the timber and builders merchants for 20 odd years. So I understand those markets. Barry John Davis has already implemented the wood plastic composites with the largest sawmill producer in the UK, BSW Timber. So we understand the marketplace and routes to the marketplace. We just need to be able to get the product into the marketplace now.
Okay. And what are they looking to see proven out, or what would prevent them from signing letter of intents and contracts today?
Right. The prevention they've got is that we have proprietary formulation. We can take 7 to 8 different polymers and produce the product they require. The product we've already tested in R&D has a better quality and properties than what's on the marketplace, which is produced by Hahn. Now, Hahn have been in the marketplace for 30 odd years. Started out with a very low-grade product in Germany, moved into the UK by buying a company that was failing, and have recently gone into North Canada to target the US marketplaces. We have a pipeline of proposals to drive the product down the structural capacity route by provision of increments by including carbon fibers, glass strand, and potentially even Blake's, which is a carbon graphene paper.
Great. Yeah, and then are there any either channel partners or government-based programs?
There's government-based programs are there, but they're generally targeting the packaging marketplaces rather than the construction marketplaces.
Okay.
And the channel partners, we would go down the route with the proven channel partners to break the marketplace under OEM brand. because we've obviously got a product here that we can use as a baseline product, which would sit very comfortably against ungraded carcassing timbers. But if we can adopt the customer lines with the OEM brand of using structural-based products, they can then go up against the grade SC4s, the SC5s, and into the kiln-dried treated materials marketplace, of which we're within 10%.
Right. Perfect. Yeah, I guess my last question is, you touched a little bit about, on your background and some of your connections, like who else is involved in the team, and yeah, if you want to share a little bit about their backgrounds too.
I mean, at the moment, there's only two co-founding directors. That's Barry John Davis and Chris Jones. Chris Jones has had a background of working as an entrepreneur and investor privately with other companies, and he's got heavily involved with the space marketplace, and specifically with two and three tier drones. And he's brought in that capability of the graphene links, where we can roll the paper into structural capacity because they're using graphenes in space travel. Barry John Davis, 20, 30 years of working globally within the timber and the wood composite marketplace, has delivered branch companies in manufacturing in the UK, South Africa, Australia, and in America. Worked very heavily with Trex.
Perfect. Sounds great. Thank you.
Matt, you want to go next?
Sure. I guess kind of just like on the fundamental angle for the company, do you see yourselves more as a manufacturing company or a material?
Oh, definitely. Company? Definitely manufacturing. The technology we've got is in the manufacturing side. I've spent 2 or 3 years working and learning how to operate the machinery in its own basis from day one, really. So I fully understand the whole process and how that product needs to be produced, because it's all about back pressures through the extrusion and the drying times of the various different polymers. We do have plans to take it to marketplace through trade brand, which we would directly go into the trade marketplace with. We're looking for distribution partners rather than going direct B2C. If we go direct B2C, it gives us fundamentally too many problems, because we're looking to take product back once it's been used and revoked in the marketplace by end of life. We can actually bring it back into the marketplace and reproduce it. And we can do that 8 times before we can finally go to full reproduction of synthetic grade oils. So we can fully have a product that's 100% recyclable. And to get to net zero, which is where we want to start the business out from, we're looking at solar and biodiesel generation to power the plant. But the second phase, we would actually look to link the extruders through further R&D and engineering to in-house generators, which potentially we can deliver up to half a gigawatt of power from a 24/7 operation.
Thank you.
If it's such a straightforward business, why is no one else doing it? And what's your story?
The infrastructure in place is, with the existing companies, is fundamentally too expensive for them to replace. If you take Hahn, they've got 4 manufacturing plants, 2 in Europe, 1 in the UK, and 1 over in North America. And they built their product over 30 years. To take that product out of the marketplace, which they would have to do by stopping production and then re-implementing the product exactly the same, is going to be a very hard process to do, because they use intrusion molding for their superior product. But to do that and gain structural capacity, they use a steel or aluminium insert into the mold. Their standard extruded product is very flexible, and that's produced over in Germany. And that's because it's on a linear low density, high property for formulation. But we can compress the polypropylenes, polyethylenes, nylons, PMMAs, and polystyrenes, along with linear low density and low density, into the product, which gives it a better capability already than the more flexible LLD product. So they would lose market growth effectively by changing their product market, their product output at the moment.
That's always helpful on your side of things. What's the biggest challenge? What's the biggest challenge or struggle that you have currently?
Trying to find the capitalization to put the plant together. That is the biggest struggle, because the UK marketplace is very anti-manufacturing at the moment. It's not looking for manufacturers, it's looking for tech products, and all tech investment. 80% of investment in the UK market is down in tech. And we're not a tech company. We are a hardcore manufacturing company. And that's a hard thing to raise established funding for, because it's a long-term feedback and long-term exit structure rather than short-term high growth. Although we have the high growth through the production and scalability of the plant.
Is there any possibility of licensing?
Oh, definitely. Chris and I have often spoken about this, and because we want to blueprint the whole footprint from day one and report it and put the whole package together, we can take that into the third world countries where we would eliminate and reduce the costings, because a lot of the polymers are sitting there in third world countries. And we can gain a lot of European funding for doing that, as well as a lot of DTI backing from the government. But we have to have the proof of concept in place first.
Why do you think it's proven so hard to get a proof of concept?
I started this and driven it basically by myself from day one, because I got to a situation where I was dealing with the global marketplaces and I was stopped from going back into the timber trade because I was working for a manufacturer that basically stopped me from doing that because I had too much inside knowledge. And then I started to do the research for myself to find out where the products were going in the future. And this was back in 2010, 2011. And I spent 2.5, 3 years putting that information together to drive this forward under my own remit. I did get a company up and running for distribution for a mixed waste product. And the European manufacturer then decided to sidestep and wound the company down because they couldn't produce the quantities and volumes that we were looking at in the UK market.
Understood. Well, thank you. Thanks for pitching. Thanks for sharing.
Okay.
Any last questions for Paul, guys? Then let's move over to 13 Murray and Crossy. And Crossy, I am going to take the floor, share my screen, and you just say next when you want the next screen up. Sound good?
Another shot. I decreased over here the resolution, so maybe it will be clearer this time. Shall we give it a go?
Yeah, we can give it a go.
Yeah.
Let's hand it over to you.
I believe you can see the screen now.
See the screen. It looks good. I think you should be good. Tell me when you're ready, and your time starts now.
Thank you, Matt. So we already started in Mari's low-cost, innovative approach for reducing the vessel resistance, the energy use, and the resulting fuel consumption in maritime. We identified the opportunity. Is the number one operating expense, CO2 emissions must be reduced. Funding will be cut. In this environment, our product has a total addressable market of 6.7 billion. And 45 million tons of CO2 elimination potential. The story of 13 Mari started here. I noticed structures to the floor, did research, managed to recruit a recognized NATO and DARPA partner as a principal researcher, and we wanted to find solution applicable to shipping. After all the work that we've done, we settled on this element. This element has the ability of increasing the mass flow above the turbulence by 10%. And in this particular that we've done, this is a result of 20% less drag. This 20% translates 1-to-1 to energy, and should the fuel be moving the fluid, fuel savings. And this is the ultimate potential of the technology as we presently know it. In the context of vessel, we are installing a set of elements of the hull of the vessel. They measure about 1%, relatively small, and with them we can achieve up to 7% efficiency gain. This is a small vessel that was retrofitted. We are literally epoxying the elements to the hull. With this, we executing the retrofit while the vessel is into the dry dock, and every commercial vessel undergoes regular scheduled maintenance. By not compromising the integrity of the hull, we now have a product that is very low risk for the vessel. Going back to maritime, we focus exclusively on bulkers, tankers, and ore carriers in the first 2-3 years of the existence because of specifics in the container carriers. This is an example of what can be achieved for the biggest ore carrier on the planet. 13 Mari could be generating revenue up to 100,000. 3.2 million in savings will be realized by the vessel owner for the course of 5 years, which covers the typical scheduled maintenance, voyage scheduled maintenance cycle. And the margin looks pretty good, which means we don't need to sell a lot in order to meet our revenue projections. Now, in terms of competition, of course, we have competition. We are first mover with a novel patented passive and simple low-ability and zero OpEx product. The other products that you see on the screen, they are presented as recognized by Lloyd's. The important here is that we can work with any of the competitor products, except for perhaps the application. For savings, that's stack. Now you've seen the market, you understand the size of the price. This year we have self-funded to date. We won the Captain Stable December 2021. The Commission on Science, Innovation and Technology with the state of New Jersey awarded us a grant. We are looking to raise a seed and a follow-up Series A conversion will take place in 2023 or 2024. The funds are used to get to the first sea trial and from there to begin commercial operations. Few words about us. We have great wealth of experience. We blend maritime, scientific, technology, engineering, and business. Bernie Heine, Mark Fortnum, Klaus Nemzov, Javier, Ilse Tanasova, all from the maritime industry. Mark is a former managing director from British Petroleum. Javier is from Carnival Cruises. Klaus is a former chief innovation officer from Eastern Pacific Shipping. These are our partners. Once again, we won the Captain Stable, which unlocked the relationship with Lloyd's, with each of them. Again, the innovation and technology. This is what we have in the customer pipeline. As a matter of fact, this slide needs to be changed because we're talking to additional maritime companies at the moment. Pretty big pipeline. Daryl Maritime is providing the first vessel for trade.
30 seconds.
While we're extremely focused on the maritime business, operations in other verticals are possible since our elements influence the flow everywhere. The company is looking for an acquisition in 4 years' time. So once again, we have an inexpensive passive zero OpEx product decoupled from proposer and applicable to a vessel. We have a technology that enables the creation of new type of energy saving device, wind offshore included. And with this, the timing for the investment is right. We have everything to begin execution provided the funds. Thank you.
Time is up. Awesome. Thank you for pitching, Krasi. I'm going to bring our other investors in. And then after this, of course, we'll have the startup of the night moment. One thing I just quickly wanted to ask is, yeah, it looks like cleaning the hull actually increases the efficiency more than what you guys are doing. Can you clarify a little bit what hull cleaning means?
Yes, you're right. But cleaning the hull does not work for more than a couple of months. And after every cleaning, the hull needs to be cleaned at ever decreasing intervals of time because the anti-fouling paint is scratched and the fouling happens quickly afterwards. Some companies settled on executing scheduled maintenance at a shorter interval of time. It's more cost efficient to actually bring the vessel into the dry dock every 2.5 years and replace the anti-fouling paint with a fresh new paint instead of performing co-cleaning.
Okay, understood. And in terms of the actual upside to the business, the 4-year exit is still something that I'm a little hesitant on. How big can something like this get?
It can get really big if we focus on the right subsegment. For instance, we start conversations with Euronav for some of their vessels through tow carriers. The annual savings between 500 to 600,000, which means that with very few installations, we'll be making reasonable revenue, even one.
And how do you plan to scale that up? I know you've talked about working with shipyards and having it be almost a B2B to B model.
This is correct. I cut off the slides though, because the 5 minutes do not allow to discuss this. There are 216 dry docks for large vessels worldwide. By focusing on the really large vessels, we need assistance getting reasonable coverage in, let's say, 150 to 200 meter space. The dry docks are already performing services for the vessels, so there is benefit. There is benefit working with them, and we intend to provide all the tools that the dry dock needs in order to successfully include mapping software that pinpoints the installation locations on the vessel hull, the elements themselves, the white labeled installation materials, training and certification.
Very good. Thanks. Matt, do you have questions?
Yeah. My only question is on the licensing versus product sales. I want to understand how you plan to do that, both in the early stages and as you continue to scale.
The licensing, you mean the dry docks, or because at the moment we also contemplate a licensing type of model when it comes to the elements, but really what will happen, how the product and the company develops depends on what the vessel owners want. And so far, the vessel owners are willing to pay for the installation elements instead of sorry, I misunderstood the question. I'm thinking about leasing, going into a different territory there. So in terms of licensing, the dry docks, they're performing installation, so they are making money for installation. We don't compete with them on labor. We're just providing the tools. Whether the revenue will be split 50-50 or in a different ratio, it's a subject of future discussion, of course.
Awesome. Thank you so much. It was great hearing more about this.
Thank you, man.
Yeah, no, exciting work, and I mean, it seems to be a clear, like, clear value from all the stakeholders' point of view, from my side, seeing the presentation, but what kind of pushback or what are the barriers to get the ship owners and other partners on board for this?
No pushbacks. It's unbelievable that the company is getting inbound calls from pretty big companies.
Okay.
So what really stands in the way is securing the funding until we get to the end of the sea trial, and then for the commercial operations, I bet that raising additional funds is not going to be a problem at all.
All right. And do you see this as the main funding round, or what comes after? Is there another venture round after this with the fundraising strategy?
So we don't really need to raise a lot of money after the convertible note, but given the economic situation, we have to offer interest, and the way to contain interest is to convert relatively quickly. Even why not next year after the sea trial is done? The Series A, the company is not going to raise a huge amount of money. There is no need for that as well, considering the margin and considering what the company needs in order to start scaling. And scaling will not happen really for the next 2 years. I mean, the plan is to begin leveraging dry docks once we have proven that the mapping software works internally, and we need the mapping software for our own use. And from that point on, we'll start looking for perhaps additional funds if we need that to develop the training certification programs and to really scale the operations via the dry docks.
Okay. And yeah, my last question is, are there other companies that have gone through this model of an attachment, underneath the boat, even if it's in a different sector, a different use case? Has this model been tried out in the shipping industry before?
In the shipping industry alone, I'm not aware of, even though companies are doing performing installation of energy saving devices in the stern section of the vessel. So yes, if we're talking about energy saving devices, there are energy saving devices that will be built. Oftentimes, some of the devices, they need to be tested for the specific vessel, which means that there is no software and there is no easy way of scaling. And model tests are due in order to optimize the device for the particular vessel. This is not the case with us. With the software, we'll be able to solve the problem without additional testing into the tow channel, which is expensive. Then really, if we are talking about analog to what we do, we should probably look at aviation partners. I was shocked to learn that the winglets of the Boeing planes, they're not developed by Boeing, they're developed by aviation partners.
Oh, great. Yeah. Appreciate it. Great presentation and great answers to all the questions.
Thank you, Jay.
And especially interesting given the shipping industry these days and trying to make and decarbonize big industry. Thanks for presenting, Krasi. Unfortunately, Taj and Matt needed to jump off. They had one, other commitments, and two, a dialysis machine they had a date with. So it looks like it's left to you and me, Jason, to determine our startup of the night. I got votes from Taj and from Matt already, but I'll keep those secret until we hear your thoughts, just not to sway your opinion at all. And this is the part of the night, folks, where we choose, this is the company we're most, or these are the one or two companies we find most interesting, would most want to set up a follow-up meeting, see the biggest potential, possibly invest in. What would you think, Jason, from your side and your experience?
Sure. Yeah, give me a second to look back. I mean, they're all really exciting. So, yeah, I guess I would say, I mean, the top two that stood out for me would be FlexSea and 13 Mari. All had kind of really answered the questions I had before, having to ask them. And they had, all the companies had really innovative technologies that hit that positive environmental effect, as well as the positive, return potential. But yeah, I thought, they were able to showcase that really well. So excited to hear what everybody else.
Very interesting. Well, from Matt's side, Matt said ZILA Works was definitely his favorite. And Taj told me that he was a big fan of Pawprint and what they were doing. I think from my side, I would say ZILA Works was also my favorite in terms of what they're managing to accomplish on the bio-epoxy resins and the traction they've got on that side of things. I was impressed as well by Dizzy, as they've gotten pretty far with their systemization and reusable packaging, although it's also a very competitive model where there are a lot of players in the space. The question is, can they be the picks and shovels for all the other players, or will they ultimately be usurped? I would choose ZILA Works then, and that would, I mean, technically that's our closest to consensus. 2 votes. Are you happy with that, Jason?
That sounds good to me.
Sounds good to you. I hope that sounds good to you as well, other Jason.
Yes, thank you. Greatly appreciate the support.
And to everyone who's tuning in, thank you so much if you've made it to this point. It's been quite a grind. We've had some incredible companies on. If you want to reach out to any of those companies, it's generally first name at domainname.com, but I'm sure you can find the founders on LinkedIn, etc., where all the details will be. If this is your first time, be sure to subscribe to the Startup Tank. If you're on YouTube, hit the subscribe bell so you don't miss a thing. Jason, where's the best place for people to find you and learn more about you and what you do?
Yeah, happy to connect on LinkedIn. And I also have a personal site, jasonkraus.me, that has like an access to reach out and has all my social channels on there as well. So happy to connect with anybody that took the time to come out today.
And if you're looking to learn more about us and what we do, I run Forward VC. We're an early stage accredited investor syndicate focused on climate companies. So pre-seed and seed stage companies like you see here, companies that are changing the world and having massive positive impact with massive ROI. Because let's face it, if you have to recreate the entire economy of the world, that's a pretty big opportunity, so to speak. And that's why we're big on climate companies. You can learn more about us and download our 750 plus climate VC accelerator database at Forward VC. So the number 4ward.vc/VC database. We invest in companies that move the world forward, like all the folks here. Guys, thanks for coming on. Thanks for pitching. Thanks for sharing your project. I know it's not easy. I know technical difficulties can make it tough. And I know running a startup is like the baby that you can never give up and have to go forever and ever with. But you all did a great job. Thanks for coming on. Thanks for tuning in, folks. And of course, the startuptank.com. You can subscribe, find us on all of your major podcasting platforms. And we've got Slack communities for investors and for founders over at forward.vc, the number 4ward.vc. Let's all go move things forward and maybe get some dinner if you're in the European time zone. Talk to you guys later.